Hi guys, welcome back to the day two of analyzing Euro USD. We are pretty late because we analyzed exactly at 11:30 and it's been 11:40. But right now we can see that the market has taken the highs of the previous 1 hour candle, and let's see what it gives us today. And also the yesterday's move, it was so impressive. Like we took the entry. Wait just a second. Okay. So, so we took the entry over here, right? As far as I remember. Okay. Yep. Wait. Okay. So we took the entry over here, and I told you that it's gonna go up a bit, not fully, because there was a liquidity level on the left hand side that I showed you yesterday, and it gives so pretty move. It happened to consolidate a lot, but it gave like a lot. But we just took 30-20 pips, and uh we just took 20 pips and we closed it. So the thing was that I wanted to test the one ratio one strategy because it focuses mainly on the win rate rather than win ratio. So we are not catching the big moves, we're catching consistent moves, decent win rate. So if you see that we gave a lot of space to the SL. In actually, the SL should be over here. See, if the SL would have been over here, it would be 16 pips. But we gave it a space of a little 20 pips. Why? Because sometimes it happens the market takes the stop loss and we don't see the liquidity on the left side and it just takes our stop losses. But we did 20 pips. Why? Because it's the average SL because when I back tested it, it's the average SL that was appearing to be 20. So I took that number 20 and so we are consistent with it. And the take profit is also 20 average. So we are going with that. So let's analysis top down analysis we can do today. Okay, let's hop on to 20 on the daily time frame. Let's see on the daily time frame what we gonna see. Um, not much. Okay, the candle of yesterday. See, always when you have to analyze, you have to see the previous candle. What's happening with the previous candle? So, here we see that the previous candle closed above the Friday's candle, and it had a long wick. See, the body tells the story. The body is small and the wick is huge, right? So the market gave the rejection from this area and it failed to break this high, right? So why it failed to break this high? Because there was no potential in market to move more further. So it had to take the liquidity from the downside and move more again up. So here when the market opened, we saw that there was a wick above. It filled the half wick, and we see back down, right? So on 4 hour time frame, we see just a second, let me close this. So on the 4 hour time frame, we see that there is a little the this candle has taken the low of this candle and it's moving above and making the bearish FVG. If it closes like that, then it would be valid, but if it filled, I mean, then it would not form the bearish FVG. Let's see on 1 hour time frame. On 1 hour time frame, you can see that there was a bearish market structure. Okay, and if we put the fib from here to here, I expect, now you see the main thing here. I expect that the market will retrace to 50 to 61%, and on the 61% you can see that there is a important fair value gap that is not tapped yet, right here, right? So we gonna wait the market to come over here, and again it can give the bearish move. So I expect that the market could be a little bullish for now and then it can come down. Yep. This is the scenario for now. I feel that the market will be bullish. And also it broke the previous highs of this candle. But again, you can see on the 1 hour time frame what I told you. The interesting part. This candle has no wick, right? This candle right over here has no wick. We know the theory that 90% of the candles are printed with wicks, right? When we know that the market is not printed with wick, we expect it to make a wick either on this candle or maybe the next one, right? So if it flips, we're gonna see the candle coming like this, right? And move more further down. So this is the case right now. So we for it to come down, it had to make a structure for the bearish and give us a good entry on the lower time frame. Now let's see on the 5 hour, 5 minutes time frame. If we see any reversal, we're gonna take the entry because it already took the liquidity of what? Sell side liquidity. The scenario for now. Let's see. I will plan the trade accordingly when we see the entry or any bearish structure or any signal that confirms that it will go down. Also, I can see if you see here, right over here, it breached the highs of this. Can you see? It was an equal high and it breached it, right? It's possible that it can come again a little more and come down, but it breached it. So um there's a chances that maybe it can come down, right? If we give this, yep, it would be good, not that bad. So the liquidity of this has been taken. Liquidity of this highs have been taken. So I am gonna wait till 12:30 almost. Okay, half an hour. We're gonna wait for the entry. If we saw the entry, we gonna take it, and if not, I'm gonna put it on the my Instagram stories what I took, and then maybe tomorrow we're gonna analyze that what happened. But I already gave you what I'm looking for. Maybe I'm looking for the bearish trade rather than bullish. So there's one thing about trading: the more simpler you make, the more objective you make, it's more easy. For me, it's easy. Like, I don't want anything that is like subjective. Like, for example, you talk about support and resistance. See, for me, support could be something else. For somebody, support could be anything else, or resistance could be anything else. So it's very subjective in nature. But I like things. But for me, like it could be varying dependent on the trader to trader. But for me, it's like the thing that matters is objectivity. See, you see a setup that is working every day, or maybe you see a setup that is working on most of the days and you know it's gonna work, so you don't need to predict then. It's probabilities, predict then. So we need to just know our setup, know our strategy, see if it's playing out. If it plays out, just take it. It's like a playbook. You should have a playbook. Like, you know your setup, you know your entry, you know your TP. When you see on the chart, it's playing out, you take it. That's all a trader should do. Traders should trade. Nothing else. It should expect or predict or whatever. So that's all basically for me. I see my setup plays out, we take it. That's how simple your strategy should be. It should be you should know your defined time, defined pair, defined setup, defined TP, defined target. That's all. Every day you need to just see and just done with the work. It's like you don't have to work all day and looking on the charts. Also, I don't know if I told you guys about, I think I told you yesterday a thing that called trend line liquidity. So, every time the liquidity that is trend line, in a trend line, like for example, it's here, it always get liquidated. We are coming in the trend, and at a point, it just boom. Okay, so what's happening here? Same thing. I told you it gonna take this, it took this. For example, yesterday on yesterday's trade that I told you that it took the liquidity of very long back, like on the 8th August it was something, right? So here was a trend line liquidity, it came up, boom, and I'm gonna show you all the examples, right? Like this, you can see, right? Yep. So here was a trend line liquidity, came up, then came down. This was the trend line liquidity, came a little down and then came up and took these highs. It happens every single time. See, trend line liquidity, it came up, took the highs. So market happens like that only. At a point, there's a trend break, we can say. If not today, it's gonna like liquidate it after some time. So see, 10 line liquidity came a bit down to the liquidity of lows and came up to the liquidities of highs and came down again. See, every move is a like if you are thinking in the terms of the how and where the market is gonna take the liquidity, you are sorted. All you need to find where the liquidity is. See, so here this was a trend line liquidity, so good, came down. Till here it came down. It was so impulsive, right? And then gave its move. Trend line liquidity came down. So every move you can expect the market as a trend line. See now if you see the market is moving so beautifully, like up, making so good higher lows, higher lows, higher lows, higher highs, higher highs, higher highs, and after some time you're gonna see it also get liquidated, right? So, but it was in a bigger time frame, right? So let's see where the market gets reversed from, and most probably maybe it can come till here or till here, and we can see a bit reversal, right? So if we talk about liquidity, so there are like major liquidities. One is I showed you the trend line liquidity, or right, and one is on the equal lows and equal highs, like equal lows and equal highs, like yesterday that we saw that our target was on equal lows, so market had to come there. One liquidity is on the ranges of highs and lows. For example, on the 1 hour, if we come see on 1 hour, the liquidity would be here of the buy side and the sell side liquidity would be here. So this is the one range. One range And if this, for example, if the candle comes here and closes back within this range, it means there is a liquidity sweep and we're going to see the move coming down further. And vice versa, if we see it here, we're going to see up. Like on the lower time frame, obviously we're going to see some structure that is a reversal, right? So I'm going to give you the example. See, for example, is our this is our space, right? And this is the market, is the rocket. The market is a rocket, or okay, it's going up. And now the fuel of this market has been finished. The market has no fuel, so it can't go more up, right? So what it had to do, it had to come down to recharge it, to refuel it. And if we know that the fuel is right over here, right over here, we gonna the market, so we know that means the market is gonna come down and recharge itself, refuel it, and gives us the move, right? So the market moves like that. It needs food. The food is the stop loss, and the food is the stop losses. Stop losses of the retailers, of the new beginners, on the obvious highs and lows. It's the food for the market to move more up, to get more liquidity in the market to move forward, right? That's the whole concept of it. And if you understand it well, we're gonna thrive it better. So almost it's 12:30, and I think that we're gonna get the trade maybe uh after some time. And if we get the trade, I'm gonna straight away post on my Instagram, and you can just check it out. And maybe most probably the analysis will come after some time. I'm gonna post this video after some time, and see you tomorrow.